Is the housing market about to get hammered? Well, Realtor.com put out an article last week saying it is. Now, Realtor.com is a company that covers the real estate market on a national level. Some people say that all politics is local, but that's definitely true in real estate. Real estate can be different county by county or even city by city. But this article was really hard to ignore. They basically said that buyers should expect things to get worse in the next few months because interest rates are expected to continue to go higher to tame inflation, which is going to cause mortgage rates to increase and make it more difficult for buyers to purchase real estate. Last week, mortgage rates hit their highest level since 2008, coming in higher than 6% for a 30-year fixed. The core CPI report, or inflation report, which covers everything but food and energy, also came out last week, showing that the rate hikes that the Fed has been implementing up to this point haven't lowered inflation so far. With that said, the Federal Reserve is scheduled to have a meeting this week where they're expected to raise their benchmark interest rate by 75 basis points, and some people think they're going to raise it a full point, which is going to cause a lot of upward pressure on interest rates. And if they do this, you'll most likely see them go higher than where they are right now. High mortgage rates combined with still high home prices are going to be a problem for buyers as we head into the historically slowest part of the year. Rates have more than doubled from a year ago. If you take a look at this chart right here, you'll see that about a year ago, interest rates were at 3%. Fast forward to today, and interest rates are at 6.35. To give you some perspective on that, if you were to buy a house in Orange County where the median sales price is $1 million, on a 30-year fix at a 3% interest rate, your payment is $4,216. However, if you look at what your payment would be with today's rates on the same sales price, your payment is $6,222, which is an increase of over $2,000. That's an increase of about 40% compared to how it was a year ago. The problem with that is most people's incomes don't increase by 40% year over year. To get the same mortgage payment that you would have got at a 3% interest rate with today's interest rates, you'd actually have to buy a house for $675,000, which is a decrease in buying power of over $300,000 in the last year. So because of this, the number of transactions is expected to decline even more than it has already if rates continue to go higher. As you can see on this chart right here, the number of transactions in Orange County is down by more than 30% year over year. The Realtor.com article goes on to say that they expect prices to lower. They don't expect them to come down this year over year. However, they do think that we might see a decline in home prices in 2023. Now that's on a national level. To give you an idea of what the year over year median sales prices are in Orange County right now, take a look at this chart. You'll see that year over year, we're up 9.3%. However, if you look at this chart right here, you'll see that month over month, we've flattened out. The median sales price in Orange County in July was $995,000. In August, it was $1 million, which is down from the top of the market in April when it was $1.09 million. So we're down about 8% since April. In the article, Realtor.com's senior economist said that if the Fed continues to raise rates, that it's going to put us into a recession. If rates increase, businesses won't be able to borrow money and grow their business and hire people. If people don't have jobs, they're going to be less likely to spend money. And if the people that do have jobs are actually worried about losing their jobs because of a potential recession that could be around the corner, they're going to be less likely to buy homes, which could cause prices to come down even more. Now that's one perspective. On the other hand, there are some economists that don't think home prices are going to come down. They expect them to flatten out, and if they do come down, they only expect them to come down slightly because the demand for housing is so high at a time when we have such a short supply of homes for sale and for rent. And with unemployment so low and more jobs needing to be filled, some economists think that we're going to avoid a recession altogether and achieve that soft landing that the Federal Reserve has been looking for. The bottom line is nobody really knows what's going to happen, including high-level economists. It's very difficult to predict the future, but you can be prepared for the future if you know what could potentially happen either way. Yes, I'm a real estate agent, but I will never tell somebody that they should sell their house or buy a house. I just want you to be aware of what could potentially happen either way so you could do what's best for your specific situation. Hopefully we earned your thumbs up in this video. Maybe you'll consider subscribing to our channel. And if you have any questions or comments, please put them in the comment area. And if you want to send me a private message, my contact information is in the section below. I appreciate you watching, and we'll see you next time.